I made a substantial gain about 6 months ago on ZIM. I bought low, sold high, and I'm beginning to look at the stock again to potentially buy into it. I think this stock is unappreciated, but it's about timing the acquisition of these shares at the right time. The shipping industry is highly cyclical. It'll go up and down based on shipping rates. And as I look at I think the turmoil that tariffs could cause in the world, as we have surprises in supply chains, rates go up. Rates go up for companies like ZIM and their competitors. And as shipping rates go up, ZIM makes a lot of money. I also think about how tariffs could cause companies and countries to start sourcing products from places they hadn't sourced before. So those types of factors lead me to think that the shipping industry should enjoy a good 2025 and maybe a good 2026. Having said that, I'm going to take a look at ZIM and see if it's good stock for me to pick up and really own it until it reaches a certain level. This type of stock, I like to make a decision on under what conditions would I sell the stock, both upside and downside. If I see the stock appreciate, maybe in this case here to $22, $24, I should sell and just take the gain. Whereas if I see the stock maybe collapse, then I'll have to make a decision as well. So let's take a close look at ZIM. ZIM is just a $2.16 billion market cap company. They have really nice high revenues that have been growing really fast because shipping rates have really cooperated with them. They also, their net income very profitable, and they're paying this massive dividend. All those things look really good. The PE incredibly is down to 4. This company was producing so much money. It was a little ridiculous, a lot of cash. Good news is they bought new ships with that cash, which is a really good idea. That way they can operate more efficiently. I really disagree with analysts. I don't think they understand ZIM, and a lot of them say sell, but I'm going to disagree with them, and I'm the one that's investing my money, and I'll use my analysis to make a decision on this stock. Over the past year, it's been a winner, up 36%. But on the last occasion when I bought them around this range and really enjoyed a nice quick rise, and then sold. I sold at low 20s, and I'm really glad that I did so because the stock really has had some volatility. It's seen some really nice highs. It really went up close to $30 per share, and it's really come back down. This really low point here is really looking interesting to me. Reason for it is I think some big factors in the world are going to make shipping more important. And I think all these surprises around tariffs and who's going to be charging who a tariff, all that uncertainty is going to create better shipping rates for ZIM, is my expectation. ZIM has been growing their business nicely over the trailing 12 months with a growth rate of 21%. If you look at the quarterly, it looks even better because they really doubled the revenue level in the most previous quarter compared to the year prior. So really good profit, great free cash flow. I mean, the numbers are just really staggering, and they really cause my model to show them that they're really discounted. So it's not a matter of looking at the fundamentals and saying, hey, this stock is discounted, which it certainly is. It's a matter of looking at this industry, looking at the big picture of what's going to happen from the economy perspective, the global economy, and trying to assess, are we going to have a better environment or a worse environment for ZIM? It's my opinion that they're going to have a good environment. As you see conflict between countries from an economic perspective, tariffs and so forth, you're going to cause countries to have to source from different places. Those surprises, they're going to have to source and pay rates to these shippers that are going to be higher than they were before. So I'm expecting that's going to be the case on this stock. ZIM is highly discounted. If I look at their free cash flows, it's just staggering. Even though I'm using a 15 discount rate, they're trailing 12 months, and I'm not seeing why I should tone that down. It's 2.5 billion. I actually am lowering each year by 20%, and it still measures up really high from a market intrinsic value of the whole company. So the cash flows are just tremendous. Their earnings per share is kind of tough to predict, but the best prediction out there, I use that, and it's fairly priced according to that. Overall, this cash, once it gets to them, they can return it to shareholders in dividends. They could buy back shares. They could buy other companies. They can buy ships. They can do a lot of things with it. So it's a very positive situation from an economic perspective. Now, ZIM's not the only stock I've invested in that's a shipping stock. I also invested in Panal, a tiny shipping company. And I four-bagged my money and then walked away. And I really enjoyed that investment. Then I made money on ZIM just more recently, which I really liked. So for me, I am going to look to buy into ZIM. Their current stock price is a little under $18 per share. I'll probably put in a buy order on the stock right around probably the low $17 mark, maybe $17.21 or so, and just pick up a few shares. If it drops below 17, I'm a buyer. I'm just going to buy shares, maybe accumulate $10,000, $20,000 of shares and see if the stock begins to rally on good news. Their earnings are going to be announced in March. So we got about a month of time to see if there's any big picture stories that come out that help or hurt ZIM. But I'm guessing that ZIM is going to announce positive earnings come the earnings announcement in March. So that's my analysis on ZIM. This has been a good stock for me, and I'd love to come back. There's nothing wrong with buying and selling the same stock and making money on all occasions. Nothing wrong with that. And I thought that it was a good move to really have the right expectation on this stock when I invested in it before. ZIM is not a stock that I expect I'm going to own for the next 5, 10 years. No, I expect I'm going to own Meta for a long time, maybe 10 years. Who knows? If Meta decides to get into fashion, as an example, and go completely out of their industry, maybe I'll sell because I'll think they're crazy. But if Meta keeps doing what they're doing, I'm just going to own that stock. That's different. ZIM is really subject to a lot of economic forces in the global economy where it could be fair or unfair to them. And they could really be uh, taken down a few rungs in profitability, not from what they did, just by the environment that the global economy puts them in. That said, it's going to be a short-term investment, maybe less than 1 year. If I end up buying shares and I hold them, I'll probably have an exit strategy defined. Again, probably sell at $22 to $24 per share and probably sell if my ideas are not working here and the stock drops maybe to $14 a share.